If you had invested just 1 million naira in the right Nigerian stock at the start of this year, you could be sitting on 3.5 million naira right now. But the real question is, where should you put that same 1 million naira now for the second half of 2025? Hello, my colleagues. Welcome back to the channel. And if you are new here, you are absolutely welcome as well. Today's video is for anyone sitting on 1 million naira or planning to build up to that and wondering, how do I make it work smarter for me in this second half of this year? I'm going to break it down into two smart parts, one for those who like high upside but with risk, and another for those who want peace of mind and stable returns. Either way, I'll show you exactly where I would look if I am investing fresh money right now. By the way, this is not just stocks. I am also a doer of what I preach. As you can see on your screen, I recently put in almost a million naira into a Nigerian company stock as part of my second half strategy, and I will be breaking that down as we go on. Quick disclaimer, this video is for educational purposes only, not financial advice. Always do your own due diligence before investing in any stock, especially the ones I mention or recommend. Also, if you like to stay updated in real time with what I am researching, what I am buying, and what I am watching in the market, I share those quick updates first on my WhatsApp channel. You find the link in the description and pinned comments. Before we jump in, please smash that like button if you find value here. It helps more people discover this content. Subscribe if you haven't already, and do share this video with someone in your investing circle who needs to learn from this video. All right, without much talk, let's jump right into the video. Let's go. Okay, before I show you exactly where I would consider putting 1 million naira in this second half of 2025, let's do a quick overview of the current economic environment, because what's happening in the country right now directly affects what investments makes the most sense. If you have been active in the Nigerian stock market, you have seen that it has done well so far this year. The NGX All Share Index is up over 25% as of mid-July. That's a strong run, but it means we need to be smart about what to buy next. Now, the key things influencing where your money can go right now are: one, inflation. This has to do with that big problem of rising prices of goods and services. It slightly came down recently. As of June, it dropped to around 22.22%. Better, but prices are still climbing, especially prices of food. So your investment must aim to beat inflation. You also have the naira to dollar situation. The naira has been relatively stable lately, hovering around 1,520 naira to 1,530 naira per dollar in the official market. That calmness gives investors more confidence. Another problem is interest rates. The CBN has recently kept the main interest rate stable since May, and during the current MPC meeting which recently held, they still left it at the same rate of around 27.5%. It's high, yes, but stable. If inflation keeps dropping, there is chances that they might reduce it later this year in the next MPC meeting. For a much deeper dive into the market performance in the first half and why things moved the way they did, make sure to check out my previous video by clicking on the card above. I went much more in depth in the beginning part of that video. Now, what's the bottom line here? Well, we are in a more stable place than earlier in the year. Inflation is cooling, the naira isn't jumping all over the place like it used to. Stocks are moving. Now, with this quick picture in mind, let me now show you exactly how I would think about investing 1 million naira in the second half of the year, starting with the risky but high reward opportunities. For this section, we are going to be focused on the equities market and three stocks that have the potential to make you money in the second half of the year, especially coupled with the fact that it is quite difficult to find exploding stocks, with most penny stocks looking quite expensive and overpriced. These stocks have been covering are not necessarily penny stocks, and they offer some level of stability and solid chance of giving you some capital appreciation during the course of the second half of this year. The first stock we have on this list is VFD Group. Now, if I were to put money into just one stock in the second half of 2025, this would be it. Let me tell you why this is my number one stock. First is performance. In Q1 2025 alone, they posted a 4.1 billion naira pre-tax profit. That's a 35% jump from the same period last year. Now, the question you should be asking is, what is driving that? Simple. Their investment income soared by 47% thanks to strong gains from loans,
placements and real estate plays. The total net revenue hit 18.6 billion naira in Q1 25. Even after rising expenses, their operating profit came in at nearly 14 billion naira, up 29% year on year. And get this, they are not just growing earnings, their total assets are now over 320 billion naira with a market cap of just around 110 billion naira, and their retained earnings have climbed over 64% compared to this time last year. Now pause. It's worth knowing that all of that is from just one quarter. But numbers aside, here's what sealed it for me. Recently, Tony Elumelu, yes, the Tony Elumelu that you know, visited VFD Group during one of their culture events. Now, if you understand the kind of brand Tony Elumelu represents, you will know that he doesn't just show up at companies for photo ops. That kind of presence, it's a loud, clear vote of confidence, and the market is yet to really notice that. Even before then, insiders have been buying heavily. We are talking about hundreds of millions of naira in share purchase just in May and June. I even made a video about that. You can click on the card above to go watch. From their MDs, even the head of compliance, all of them are all buying the stock. And this isn't random. These are people who know the books, who understand the long game, and they are buying. And so far, the stock has been flying. As of early May, it was already up 142% year to date, trading at around 17 naira 90 kobo per share. Now it's down at around 13 naira. Now I know it might look like the price has already moved and is down, but when insiders are loading up, when they are still loading up, when earnings are rising, when their portfolio strategy is starting to pay off with real exits and returns, including assets sitting at almost $500 billion naira, you have to start asking, is this just the beginning? For me, I am betting that it is. Just imagine a company that their asset is around 220 billion naira and their market cap is just 110 billion naira. It's crazy, guys. It's also worth knowing that VFD Group is one of the biggest shareholders in NGX Group, which has done incredibly well due to the stock market bull run this year. So, guys, don't say I did not cut soap for you early. VFD Group is a legacy stock that is worth buying, especially when the price keeps dropping. The second company on my list is African Prudential, or AfriPrud as most people call it. If you are someone who likes consistent dividends and wants a low stress way to benefit from Nigeria's financial sector, then AfriPrud might be worth your attention. Let me break it down quickly. AfriPrud runs behind the scenes services for listed companies, things like managing shareholders' records and dividend payments. So while they are not flashy, they are also very essential in the market. But they don't just stop there, guys. They also invest a lot of the money they hold in safe instruments like government bonds and fixed income securities. That side of their business has also been booming thanks to high interest rates. Jumping into the nitty-gritty, their 2024 numbers were quite solid. Gross earnings grew to 5.2 billion naira from 3.95 billion naira the year before. Profit after tax almost doubled to 1.81 billion naira. Most of that boost came from the interest income they earned, over 4.1 billion naira just from that. But here's the part that affects how you should look at AfriPrud. AfriPrud recently did a 1-for-1 bonus issue, meaning if you had one share, you now have two shares. So yes, earnings and dividends got split into half per share, but that doesn't mean the business is doing worse. You are just holding more slices of the same pie. Now, due to this bonus issue, adjusted earnings per share for 2024 is now at around 0 naira 45 kobo. Adjusted total dividend is now 0 naira 38 kobo dividend per share. That includes the interim and final dividend payout. Now, why this might be low, the key here is even after the bonus, they are still paying out dividends regularly. And here are a few reasons AfriPrud makes sense to me, especially in today's environment. One is that interest rate is still high in Nigeria at around 27.5%, and AfriPrud is cashing in on that with their fixed income investment. Total assets of this company grew to over 34.8 billion naira, with most of that sitting in government-backed instruments. Secondly is that they are getting back to the basics. They shut down the digital side of their business. I think I've forgotten the name of that platform. They shut it down to now focus purely on their core business, which is registrar services and investment management. And with inflation still high, an investment in AfriPrud gives you better potential to grow your capital over time compared to just parking it in bonds. That said, This is not the kind of stock you want to dump your full 1 million naira into. There are still some yellow flags in the company that I would say you should do your research on before knowing if you want to actually put in your full money in them or not. It's a good choice if you want something stable with some upside and not like 10x, 100x and all that, especially with the current stock environment. That said, I'll keep an eye on their cash flow in the next few quarters and hope to see stronger revenue from their core operation. The final stock in this list is QTix PLC. You may not hear it as often as the banking giants or telcos, but QTix has been quietly doing some serious numbers, and it might just be one of the most underrated profit machines on the Nigerian exchange right now. Let me break it down for you by jumping into the nitty gritty. Between 2020 and 2025, QTix grew its revenue from 5 billion naira to over their projected 15 billion naira this year, projected actually. That's a 3x increase in just 5 years. Profit after tax is up from 393 million to almost 1.1 billion naira. It also maintained a healthy return on equity, consistently above 20%, showing that it's using shareholders' money well to grow. Now, from a macro view, the industrial sector where QTix belongs didn't boom like the consumer goods this year or in the first half, but it still showed some positive returns in the first half. And heading into the second half, we already know that inflation is cooling, the naira is stable, interest rates are steady and likely to drop. So all of these create a favorable environment for manufacturers like QTix to do well in the second half. So if you're a long-term investor looking for solid fundamental stocks and a bonus share compounding and exposure to Nigeria's infrastructure growth, QTix deserves serious consideration. When the stock price fall, I would encourage you to dollar cost average it, which you should buy more. It's not a flashy stock, but it's consistent, resilient, and positioned to ride the surge building in the economy right now.
Now, let's switch gears and talk about the more conservative side for those of you who want to grow your money without losing sleep. We are talking money market funds. They are super low risk, decent returns, and they are very beginner friendly. Here are three solid options I have looked at recently that are currently offering competitive yields. The first we have in this side of things is the Anchoria Money Market Fund. This one is becoming a favorite, especially for people looking for higher than average returns in this space. As of now, they are offering an annual return of around 19 to 21%, which is among the highest in the game. And here's how they invest your money for you. About 50% goes into equities, around 30% in bonds, and the rest, which is 20%, in money market instruments like treasury bills and commercial papers. You can start with just 5,000 naira and your returns are compounded daily and paid out every quarter. But note, there's a 180 days minimum holding period. If you try to pull out your money before that, you pay 20% penalty on your earnings. So this one is great if you are okay with locking your money in for 6 months. If you want to check them out, I've dropped a link to their front page in the description, and you can also reach out to this contact on your screen in case you're interested in this money market fund. The next one we have is Stanbic IBTC Money Market Fund. This one is backed by a big name bank. So if you are the type who values structure, safety, and ease of access, Stanbic's fund ticks all those boxes. Their focus is 100% on money market instruments, no stocks, no drama. Their current indicative yield is around 20.60%, which means indicative yield actually means that that is the expected return, not a guaranteed one. And this same thing goes for the previous one market fund I talked about, which is Anchoria, and the next one I'm talking about. But based on market trend, this particular yield is still very decent. And here's what you should know about this fund. The minimum investment is 5,000 naira, minimum holding period is 30 days, and there are early withdrawal penalties of 20% of earnings if you cash out before 30 days. Payouts are quarterly, and yes, it's very easy to invest through the Stanbic mobile app. I actually watched a really helpful video that walked me through how to invest in this. You can click on the card above to go watch that video. It's a very insightful one. It walks you through the whole step, step by step. Now, the next one we have and the final one is Meristem Money Market Fund. If your goal is capital preservation with solid returns, Meristem is another strong option to look at. They recently reported a gross yield of 22.05%, and this is before fees, an effective yield of 20.47%, and that's your actual take home after fees are removed. And please note, all these yields fluctuate, it's not fixed. You could be watching this video and they have reduced it. So it's important to take note of that. Now, when it comes to this particular fund, they keep things super conservative with their allocation. About 58% goes into fixed deposit, 32% in treasury bills, the rest in commercial papers. Returns are also paid quarterly. In terms of their risk profile, it's very low. And why the fund is not the biggest in this space is still properly regulated and very much legitimate. Whatever your choice is, these funds are not hype machines. They are designed for safe, slow, steady growth, and it's perfect for anyone who wants to beat inflation without getting their feet or their house rent burnt if they decide to want to invest their house rent. Now, let me know which one you are leaning towards, or if you want me to cover more funds in a future video. Now that we have gone through both sides, the risky but rewarding options and the safe, steady ones, the next big question is probably, Micah, how do I actually split this 1 million naira? Should I just go all in on one or spread it out? Well, here's how I would think about it personally. Depending on what kind of investor you are, if you are someone who is okay with volatility and you are focused on maximum growth, here's a strategy to consider. 70% goes into stocks and 30% in a conservative money market fund. Just to give you a safety net cushion in case things goes wrong with the stock market. Now, within that 70% in stocks, you have got a few ways to play it. You can go all in on one stock that you strongly believe has the best upside. For example, if you are super bullish on VFD Group or whichever stock I mentioned, you can pack the whole 70% or even the full 1 million naira into that particular stock. Or you can split it up smartly, maybe 40% in stock A, 30% in stock B, and 30% in stock C. But if you want a more balanced spread, you could do 25% in stock A, 25% in stock B, and 20% in stock C. And the remaining 30% goes into a money market fund to protect against downside. Whatever route you go, the key thing here is you are taking calculated risk on the equity side, but also buffering yourself with something stable. You're the type who doesn't want to see red in your portfolio or just can't afford big losses. Here's what I would encourage you to do, and here's what I would do. 70% in money market funds like Anchoria, Stanbic, or Meristem, then maybe 30% in stocks just to add some growth potential. This way, most of your money is safe and earning you solid, stable returns. But that 30% still gives you a foot in the game in case any of the stocks pop off in the second half of 2025. And if you are very risk averse, you can keep the whole 1 million naira in a good money market fund, especially if you are just parking the money for a few months or planning to use it soon. There is no perfect formula. It really depends on your goals and your comfort level. For me personally, I like to play offense and defense at the same time. Take some risk for some upside, but always have a safety net that helps me sleep well at night. Let me know in the comments which percentage split you find interesting, and if you want a follow-up video breaking down how to actually buy these stocks or funds, let me know as well in the comment section. And if you found the video insightful, let me know as well in the comment section. And that's it, guys. This is how I would invest 1 million naira in the second half of 2025. Don't forget to smash that like button, subscribe to the channel if you haven't, and also please share this video to anyone you think would find it insightful. And don't forget, there's a link to join my WhatsApp channel in the description and pinned comment, and all the resources I also mentioned in this video, you can find their various links in the description and pinned comment. And until next time, my colleagues, they will